Well, I started my investment career in Australia's last recession. It was the early 1990s. In the year I started, interest rates were at 17%, unemployment was over 10%, and we saw a number of financial crises. We saw two state banks foreclose. That was the State Bank of Victoria and South Australia. We had the pyramid building collapse, and we also had deep operational losses in Westpac and ANZ. And it was, in fact, the worst banking crisis for 100 years in Australia's history. So it was quite significant. And so starting as a young analyst, the impact of that on the importance of balance sheet conservatism, on quality of earnings and the resilience of earnings, really lodged very deeply in me as an analyst, and then helping me prepare for things like the global financial crisis that we had a decade later, where again we saw incredible duress on businesses and balance sheets. But we'd seen a lot of that already in Australia's last recession. It certainly made us focus on earnings through the cycle, earnings quality, balance sheet conservatism, whether it's hard assets on the balance sheet or the level of leverage in balance sheets, are critical elements in the way that we shape portfolios. And we also like to know where companies are in their earnings cycle and the sorts of returns that they've achieved historically. But what was very clear from that recession was that you could have very good, sound businesses, but if they're in the wrong financial structure, it was devastating. And we saw that again repeated in the global financial crisis. Well, at the onset, we're a low turnover portfolio, and so it's not regularly that we're bringing new stocks into the portfolio. So several months ago, we reinvested back into Ramsay Healthcare. Historically, that is a company that we've held, but several years ago, it was very clear that the trajectory of earnings, that they were pulling virtually every financial lever to lift up returns, and you saw a terrific escalation in earnings per share growth, up to sort of 14 to 16%. Now, those earnings now have been rebased, and as we look back at it, back in history, we can see that they were over-earning at that period of time. And those earnings were rebased to around 2 to 3%, which we thought was a very interesting time to go back and look at the company. We like its geographic footprint in both Australia, in private hospitals, in the UK, in France, and now more recently with an acquisition called Capio, which is in northern Europe. We like the profile around healthcare and demographics, and also being part of a company which is a leader in certainly private healthcare in those jurisdictions.